quite an emotional issue. This whole idea of regional banks supporting regional economies. Most of these franchises were set up more than 60, sometimes 100 years ago. By the numbers, there's about 54 regional bank brands. They have between 100 and 1,000 branches each. So you end up with around 4,500 branches. We're learning that not every branch is well managed, and that there's what I call the idiot factor. We don't know what percentage of them, but let's just use a number like 15% are run by idiots. And I don't mean that in a derogatory way. I mean, they've never experienced rate hikes this fast. When you think about the talent you required to run a bank, you only need to do two things right, okay? You need to understand duration and quality. So when you loan out money, how long did you loan it for, and what is the quality of the recipient's ability to pay it back? Or when you take depositors' money and you invest it in treasuries, how long, what duration are you putting it out at, knowing with certainty that's illiquid until it comes to maturity? In the case that rates go up, you have to sell it at a loss. Now, if you don't understand that in the context of being a banker, you're an idiot. That's my definition of idiot banker. So in the case of Silicon Valley Bank, run by idiots, the board, no oversight at all, it seems. And even the Fed seems to be culpable here because they didn't see it coming. So I think there's going to be a lot of soul searching within the system. But having said all that, let's ask ourselves a more important question. When you set up these banks decades and decades ago, it was done for a singular reason, because the banking system and the government at that time realized that there were regional differences in the economies. Texas's economy, very energy-based at the time, versus California, agrarian growing of all kinds of products and services. And then Florida was different than Illinois, was different than New York. So the regional bank stepped in to provide more local color and a touch point, particularly around the asset class of commercial real estate. Now, there was no internet banking. You rode your horse to the branch. That's what you did. That's when they were set up, and you had a bag of money and you brought it back to the ranch and all that stuff. Decades go by, and of course, we don't need regional banks in the same way anymore because we have online banking, we have electronic banking, we have digital banking. You can make a loan or apply for a mortgage from an online entity that you'll never meet anybody.
Yeah,
and indeed, that's what people do. And so all of a sudden, you start to wonder, why do we need all this infrastructure when really other countries have already proven? England, for example, has 300 banks in total running the economy. Canada, 6. Handful of banks in Australia.
Wow.
2 banks, now 1 big one in Switzerland, with some smaller regionals in Zurich and Geneva. But they don't fail because they're well-managed banks. And there's some examples in the United States, like the state of North Dakota, that has its own banking charter that oversees the regional banks in North Dakota, and they don't fail. It's the idiot banks that cause the problem. So now you're wondering about, what's going on with First Republic. It's going to go to zero because it's run by idiots, and that's okay. It doesn't matter if it goes to zero, as long as we don't guarantee every deposit past the 250,000. You
Which we did for Silicon Valley
Well,
Bank.
we shouldn't do that again, because you're making someone in Florida pay for the mistakes of an idiot in California, and they're not going to put up with that. They don't have that interest, and so there's going to be a backlash, a pushback from people saying, wait a second, I don't want to guarantee the folly of idiot bankers. And so we have rules in place. The FDIC insurance, which is only just over $200 billion now, and when First Republic goes down, it'll probably eat up $40 billion of that.
Wow.
So you have to cull the idiots from the herd. And it's okay that all the shareholders at First Republic lose all their money, all the bondholders lose all their money, and I'll tell you why it's okay. The market will self-correct. They'll say, oh, where's my money? Is it with an idiot banker? Maybe I should move my money away from an idiot banker to a less idiot banker. And the industry will consolidate to less idiot bankers in super regionals. Long answer to a complex question. No, I think they should have taken the full haircut past 250,000.
Oh, wow.
Those are the rules. Why do we change it? Because believe me, the economy would have survived, Roku would have survived, Circle would have survived, but it would have changed their behavior going forward. The market always does a very good job. It has these corrections, and I'll give you an example. Lehman Brothers, did it wipe out the American economy? No. Bear Stearns, just a blip. Enron, who cares? It didn't change the energy market.
That's a good point.
The idiots always get culled. And that's a good thing. But when all of a sudden I'm being asked to take care of everybody's problems all the time, and there's no culpability with the idiot manager, I'm not okay with that.